biggest trading mistakes, devaluation of support and resistance levels. This is the second video in a series of videos that we call the biggest trading mistakes. The first biggest trading mistakes is the breach of market pattern. What is the second biggest trading mistakes? This is the second video in a series of videos, series of seven videos that we are calling biggest trading mistakes. All right, and the question we want to answer in this tutorial is, what is the second biggest trading mistake that a day trader, a swing trader, a position trader, an investor should avoid? All right. The second biggest trading mistake is the devaluation of a support and resistance level. What is a devaluation of a support or a resistance level? All right. I will explain to traders, okay, what we call a devaluation of a support or a resistance level. Okay. We are on a monthly chart of IBM stock, International Business Machine Corporation, APIC, Indian Bravo Mike, IBM, all right, listed on the Dow 30, is in fact a market leader for the Dow Jones Index. And I have drawn a green line on my chart here, as you can see, and also I have some blue arrow, okay, dotted on my chart, okay. So first thing first, you see that the price went up. You see here it went up, and then reaches the green line. So that's the direction of the price. Price went up and reaches the green line. And at this point in time, for the first time, somebody sold the IBM stock. So there were orders here to sell IBM stock. And as I explained to traders before, where there are orders, that's where the price will go. So smart traders, smart investors, hedge fund, big institution sold IBM stock at a price level of $40.93. So they sold it at this point in time. How do we know that they sold it? We knew that they sold it because as the price was going up fast, suddenly it changed its direction here, alerting us that somebody sold it here. Let's try to put a vertical line at the point where they sold IBM stock for the first time. So if a market participant sold another financial instrument at a specific price, in this case IBM stock at $40.93, all right, that level of 40, this price level of $40.93 is a resistance level. Why? Because the financial instrument was bullish and reached the level of $40.93 and was sold, and it went down. So this green line here is a resistance level. The biggest trading mistake, or the second biggest trading mistake, is the devaluation of a support and a resistance level. So the green line here is a resistance level. Yes or no? Okay. Let me show you another one here. All right. So the financial instrument IBM stock was going down. Yes or no? So the price was going down. They were selling IBM stock. And but as IBM stock reached this level, which I'm going to color now into turquoise, here it is. For the first time, trader bought it at the price level of $93.84. All right, let's place again a vertical line there. So now we know that somebody bought, not sold, but bought IBM at around $93. Okay, so they bought it here. So because the price was going down fast, but changed direction and went up. So now we know that this level, around $93.84, is a support level. because the price did change direction. We know now. Okay? Let's pay attention again to this one. You can see that the price was going now, finally break above this, broke above this green line and continue to go up. But as the price reaches this level, pay attention careful. This is the second biggest trading mistake that we should avoid. So it's going up, going up, going up, reaches this price level. Which price level? Hold on, please. I'm going to color this level into pink to please beautiful, okay, female traders at the level of 132. Let's call it 93.00. They sold it. How do we know? Because the price was going up fast and then it changed direction here. So let's place another vertical line there. Traders sold it at $193. So they sold it here. I'm going to start changing the colors of my vertical line. So they sold it here and they sold it also here. So we know now that they sold it there. So what do we call that? Devaluation of a support and resistance level. A devaluation of a support and resistance level is just a total disregard of a support or resistance level. The devaluation of a support level, for instance, is to buy at that support level. The devaluation of a support level is to sell at that support level instead of buying at that support level. A devaluation of a resistance level is to buy at that resistance level instead of selling at that resistance level. So what are we talking about here? So somebody sold IBM stock right here at the level of $40.93. If, for instance, the price comes back to the same level and we are buying here, we are devaluing this resistance level. What we should do is to give priority to bearish signal on or near the resistance level and to give a priority to bullish signal on or near a support level, because the smart money will always buy at a specific price, because they will buy and sell at a specific price. They have sold IBM at a specific price of $40.93. If the financial instrument, after going down, return back to the same level, the first attempt is to sell. So we want to know whether they want to sell again. Here, as you can see, as IBM rose to the level of $40.93 for the second time, what has happened, my friend? They sold it. So what do we need to remember here? We will say when the smart money has sold a financial instrument at a specific price and the price rose to the same level, the first attempt is to sell. So we should give priority to sell signal on or near a valid resistance level. This is a valid resistance level because they sold it here and the price went down. Price return back to the same level, we want to give priority to sell signal below that level. We are on a monthly chart, so as the price return to this point, we will use what we call a top-down trading method. This is another trading mistake that we're going to discuss as we are talking about the 7 biggest trading mistakes. Look, as the financial instrument finally breaks above, so how do we buy at a support level? In order to avoid the devaluation of a support and resistance level, so instead of buying straight away at a resistance level, which traders are doing even without knowing, without even feeling it, trader will buy because the short-term trend or the medium-term trend is bullish and they just want to buy. But the mistake that traders are making, day traders, swing traders, position traders, even some investors are making, is that they just buy. They don't check whether am I buying at a support level or am I buying at a resistance level? What has happened at that specific price before? So they just buy, and they buy at the wrong place and at the wrong time. This is a typical devaluation of a support and a resistance level. So if I buy without even knowing that I'm buying at a resistance level, I'm devaluing the resistance level. If I'm selling, and I'm selling at a support zone, and I don't even know that I'm selling at a support zone, I am devaluing that support level. So So we will say we don't want to buy at a resistance level. The only time that we can buy at a resistance level is when the price breaks above, violates the resistance level, and then pull back and validate that resistance level. So a resistance can change into support level if the price breaks above it and find support. Break above, retest, turn around. This is a trading setup. We'll talk about it later on. Here, the financial instrument is rising. The IBM stock reached these levels. Market participants sold it. It went down. So that's the red or vertical line here. If the financial instrument returned back to the same level, which it did, here again, it returned to the same level of $133 for the second time. The first attempt is to give priority to bearish signal. Why? Because they sold it there. It's a resistance level. The only time that we can buy in this zone is where the price breaks above, retest, and turn around, validating the price level of $133 as a support level. So in that case, the support level has been converted into in that case, the resistance level has been converted to, okay, a support level. I'm just correcting myself here, okay? You see here? So you went back to the resistance zone where the smart money has sold it before, priority to bear signal below the level of $133. This is the second biggest trading mistake, the devaluation of support and resistance level. As you see, if you are applying that method consistently with other things that we're going to discuss in this series of video, if you are avoiding this trading mistake, you are likely to make better trading decisions. Violation of support and resistance level. Let's move on because we don't want the video to be too long. All right? What I recommend to traders, because this video we will compact them into a playlist. So you watch the first part, you get tired, go away, come back another time, and resume your watching the video from the point where you have stopped. So it may not be possible for traders to watch all the 7 videos that we're going to put into playlists. So what my recommendation to traders to watch it bit by bit. First video, okay, digest it, practice, master it, come back second video, digest it, master it, and move on step by step, build and improve your trading skills by avoiding the 7 biggest trading mistakes. It makes sense? So we talk about the green line, which is a resistance level. We talk about the pink line, which is also a resistance level. Here again, you can see that the price went down. It went down. Naturally, natural progression of the price, normal progression of the price went down. But as it hit this level, the price level that I'm talking about here, which is the orange line of $64, the smart money bought it in this zone for the first time. Okay, all right. How do we know that they bought it? Because as the price was initially going down, it changed direction when it reaches the price level, the price zone of $64.64. We know now. So we place our vertical line there. We know that they bought it here. If the price slowly but gradually returns back near that zone or into that zone, the first attempt is to give priority to bullish signal above that level. As you can see, though the price couldn't touch that level, above that level, where the smart money in that zone, they are buying, and this is what has happened. Priority to bullish signal where the smart money has bought it before, do not devalue a support level. Price form a bullish chart pattern in the zone where the smart money has bought it before. One should be crazy not to take advantage of this beautiful trend setup. They have bought it here. Now we see a bullish chart pattern in that zone. We don't need another permission. We'll apply a top-down trading method to trade it like a professional traders. Okay? It makes sense? So they bought it here, prior return near that zone, form a bullish chart pattern. In the zone where the smart money has bought it before, a bullish chart pattern usually will form in a bullish zone. Bearish chart pattern often will be formed in a bearish zone. All right? Or at a bearish chart pattern may also be formed at the end of a bullish trend or generally in a bearish zone. Bullish chart patterns are formed in a bullish zone or at the end of a bearish trend. Let's move on. So we talk about this one, this level, 64. Beautiful number, okay? All right, it makes sense? Now you are getting the picture, isn't it? Okay, all right? It makes sense we talk about the turquoise line here. Now let's pay attention again to the pink line, which was the resistance level. Now look what has happened. Finally, the prime trader was selling, you see. They sold it here. After the initial selling activity here, now everybody knows that this level of 133 is a resistance level, and professionals respect it. They sold it here. It came a bit closer here. They sold it again. They are not fighting the market. They are just flowing with the market. Now again, here again, it came near the same level. They sold it. First attempt. Here you can look carefully as it came for the first time. The first attempt is to sell. This is your monthly chart. You see that the price went down a few times here before finally going back above it. Talking about how can we buy above a resistance level, price must break above that resistance level and to find a support. So these are monthly. This is a monthly candlestick bar. So for many months, the price was going back up. All right? It's just going up. Okay? Remember the violation, the breach of market pattern. Price was in a rising channel. We look for opportunity to buy on the edge of the rising channel because you're a monthly chart. What is happening now, the price has pulled back to this level. Now we will say this is a bullish trade setup. So a bullish trade setup is not a bullish signal. We'll talk about that, okay, in another video because we have 7 biggest trading mistakes. All right? It makes sense? Are you getting in on? Okay. Let's look at this level. So price was going up initially again. I start breaking above the pink line, just going up, and boom, here somebody sold it. Okay, let's place a vertical line there. Somebody sold it. Because naturally, it was just going up in straight line, yes? Yes or no? Diagonal price move. That's the normal progression of a price action. So yeah, suddenly somebody sold it here. Which level? At the level of $210. Okay, somebody sold it there for the first time. Okay, now we know. We place the vertical line there that somebody sold it. How do we know? Because the price went down. Okay. Well, price went down, yes or no? It went down. All right, it went down. The second biggest trading mistake is the devaluation of support and resistance level. So they sold it here. We know now. We place a vertical line there. Prior return back to the same level. First attempt is what? Priority to bearish signal below that level. Return back there for the third time. You see here again. Priority to bearish signal. Okay, below that level. So here that level, they sold it down. Here that level, they sold it down. It's that simple. Do not devalue the support and the resistance level. So we finish with this level of $210. Okay. Let's move on. I have another line here. Pay attention. Okay. So price went down. Okay. They sold it here. It went down. But as it came here, it changed its direction. So somebody bought it here for the first time. Let's place a line there. That's the arrow here. So they bought it at which level? At the level of $184. Okay. They bought it there for the first time. Now we know that the smart money has bought it at that price. Let's see whether the price will return back to the same level. Price return back to the same level. First attempt is what? Priority to bullish signal above. Okay, that level. Here it is. They bought it again. Boom. Here it come again. You can see that the price went up a bit. Are you paying attention to the shadow of this? It went up a bit before coming down. This is why there's another trading mistake that we will talk about, the top-down trading method. This is another biggest trading mistake. All right? There are 7 specific biggest trading mistakes. The first biggest trading mistake is the breach of market pattern. The second biggest trading mistake is the devaluation of a support and resistance level. If you like this video, please give us the thumbs up. If you dislike this video, we want to know. Give us the thumbs down. All right. If you have any suggestion, any question, put in the comment section. And in due course, we'll record another video to answer your specific question. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, now it's time to subscribe to our channel. Hit the subscribe button. I invite you now to follow me to the next video when we will be talking about biggest trading mistakes, top-down trading, which is the third biggest trading mistake. See you in the next video. We are the TSTW24 traders talking about biggest trading mistakes, devaluation of support and resistance level. Speak to you soon.